All right. Happy Tuesday, traders. How is everyone doing today? As always, let me know if you can hear voice, see screen. Sorry if you heard them touching the microphone, adjusting the little thing. Real quick, got some questions on YouTube already. Akil, couple things. Did you get involved in the bet on Aussie Swiss? I did not. Aussie Swiss is not part of my trading portfolio. I didn't see it on my radar this morning either. Um, but let me know what time frame it is on, and I can check it out and see if it's something that I would get involved in if I were. I had a conversation on the platform this morning with Paul, interesting one, about a Gartley on the pound dollar. We had a little discussion on how it wasn't a Gartley for me, why it wasn't a Gartley for me, and Jane popped in. And I love those type of conversations. Again, it's always good to share ideas, and you guys know my philosophy. Unless it's blatantly wrong, I'm not going to tell you you're wrong, but I'll tell you my opinion. I'll tell you if it is or isn't one for me, and I will tell you why it isn't one for me. And in the case of the Gartley on the pound dollar, it was because of the A leg, the X to A that Paul had. Just wasn't an X to A for me. The one that I had, the retracement hit a different ratio, but it was a cool because he's never got a chance to see that. There are links, please. I don't know what you mean by there are links. Please be. I'm not the smartest person in the world, so please be very specific with your questions or comments. I don't really know what other links are. Another thing, when patterns are triggered, do you play it safe? Do you play it set and forget your move to stop loss to break even at some point? See below. Okay, yeah. A lot of questions coming in from YouTube, which is good. You need to get here on the platform and get yourself some education. But yeah, I move stop losses. If I'm taking multiple targets, I move stop losses to break even after first targets are hit. And or if I'm doing active trade management. Sorry, I'm not gonna check I'm looking at the chat right now. I don't see the links in there, so I apologize. But they're just not showing up. I don't know why that is, but you can leave it in the comment section below. I will check it later, where you can ask your question in the chat. But anyway, live rumors. Sorry to distract. If you guys are new, by the way, what we do here is I've been live streaming the first trade that we look at each morning. So I think it's a cool opportunity for people that aren't inside the platform to get a chance to see how we trade. And as you can see, we get a lot of good questions and whatnot as well, which is, I think, beneficial as well. Real quick, live rumors, or I guess anyone listening, happy February. How was your January trading before we hop into things? We got a busy fundamental week. We're going to talk about that. I call this a vacation week, where basically, if you're planning a long weekend, shut down your trading on Wednesday, take Thursday and Friday off, and call it a long weekend. But we'll get to that in a little bit. But how was your February trading, guys? I'd love to hear about it before we kind of drop in. We're not going to look at Bitcoin. I'm sorry. Nope. Today's nothing was on my radar as far as Bitcoin. So the one trade, what we do here for the live stream is we look at one trade. My top trading idea for today. Today is going to be dollar Swiss. I try to do something that I think is educational and something that's actually a trading opportunity. I didn't see anything on Bitcoin. So we could look at it in the live room later if you want to do some analysis on it, but it wasn't worth the best trading idea. So no response, guys. No one. January trading, good, bad. January learning. You guys are quiet out there, live rumors. Was it that bad you don't want to talk about it? Was it that good you don't want to jinx it? Maybe a little bit of both. Quiet group early in the week. All right, so we'll get started. You guys are sick of hearing me talk. Yeah, live room as in you guys in the live room. Yes. You're the only live roomers out here. But anyway, let's get to it. You guys are in a quiet mood today. So let's talk a little bit about what's on the announcement as far as the fundamental events. Today's going to be the dullest day of them all, I would say, today and tomorrow. We do have ISM coming out at 10. That's going to be after the live trading room is shut down, but that is something you want to pay attention to. Canadian GDP as well at 8:30 is going to be pretty important. The main kicker, right? If today's a little bit of a sprinkle, tomorrow is a little bit of a flurry, right? We've got our ADP non-farm employment change coming out. That is the precursor to Friday's non-farm payroll number, right? And then Thursday, this is the day, right? You guys should be seeing in front of you. This is the day. A lot of monetary policy stuff happening on Thursday. I missed, there should be an Aussie report as well. That might be tonight. I thought there was one. I may be wrong on that. I'll have to double check. I thought there was an RBA as well. But yeah, so Thursday's a big day. We've got Bank of England. We got ECB coming out, flooding us since 7 o'clock in the morning, going all the way to 8:30, 9:30. The press conference is usually about an hour. And then again, we followed it up Friday with the non-farm payroll. So Thursday, Friday are going to be very heavy on the fundamental side of things. So just pay attention to that. Again, the expectation whenever we see these busy news events is we expect consolidative weeks, maybe not today, but especially as we get to Wednesday, as no one really wants to kind of play a new hand prior to those events. So pay attention to that. So let's get started. Today's trade of the day is going to be on the dollar Swiss. This was one of my favorite trades last week. I can't remember if it was a trade of the day last week, but it was one of my favorite trades last week, and we did the opposite, right? So last week, we were forming a high and tight flag here on the dollar Swiss. I'm on the 4-hour chart, right? We had this right here. You guys remember this? Billy says, great January trading. Ada says, January, made some profit. Very nice. Good to hear, guys. So we saw this. I like this because not only was it sideways consolidation after an impulsive move, so a high and tight flag, but it was a high and tight flag that came after a break of structure, right? And we thought we'd get a breakout to the upside, right? Testing our previous highs up here. As you can see, we did not. We broke to the downside. Again, and there's fundamental announcements last week that came out as well, so keep that in mind. But we broke to the downside. And now the question that we want to ask ourselves is, where is the market going to run out of steam, right? If you're a counter trend trader, I guess from both perspectives, if you're a trend continuation trader, you want to identify and predict the level that you think price is most likely to go to, because if we go to that level, that's going to be a place for you to project profit targets. So you'll be able to see, is there still room to catch this to the downside, or is the move dried up? If you are a counter trend trader, you're identifying the level in which you predict price to go to because of what? If you're a counter trend trader, you're looking for potential relief, right? You're looking for, when is the move going to become exhausted? When will we or may we see a little bit of a breather, excuse me, a little bit of a retracement? So you can see, again, dispelling this myth that trend traders analyze the market one way and counter trend traders analyze the market the other way. I hate both of those terms. Both type of trader are analyzing the markets the same way. The only difference is, what are you using that prediction for? Are you using it for a profit potential, or are you using it for an entry? So as always, right, I like you guys being involved. If you're new, I don't want to just sit here and ramble to you, although I will rant. I will rant for hours and hours and hours if you allow me. But I do want you to participate in this. It's scientifically proven. It is a better way to learn, excuse me, when you participate. Where do you think price is going to go to next? Where's the next stopping point or slowdown point here on the dollar Swiss? Shoot me some numbers. Orsi already did it. 91.80. Let's hear some more. While you guys are doing that, I'm going to take my favorite tool, my horizontal line tool, and drag it down here in the 91.80s, right in there. Little structure swap, little ice zone, Orsi. You guys familiar with the term ice zone? I used to call it a structure swap, which sounds horrifically corny now in comparison to Peter Brandt's ice zone. I got 92 even over on YouTube, Justin. Raphael, 91.20s. So you guys are all looking around that same area. 92 even is right up here. 92.20 is going to be, we're already at 92.20s. So we can't be that. Or 91.20, sorry, 91.20s. 91.20s, previous structure low. Now I got you. Sorry about that. Yeah, so looks like a lot of you guys are looking in this area, two main levels. One, this little area right here, right? As we always draw it out, if we're go back to the basics of drawing the ebbs and flows of price, right? New structure high, outside return, right? See why this is important? You guys that are trying to rush through the foundation course, see why this is important, right? And of course, looking left, this is a little bit of a structure swap zone or an ice zone, as Peter Brandt will call it. And basically that means that it's a previous level of resistance, right? Price was a ceiling. So imagine, going off of our snow and blizzard reference from earlier, imagine this being the ice coating on top of a frozen lake and the little fishes below, right? It stops them from jumping out, right? Is resistance, resistance, resistance. They bang their head on the ice. On the other hand, right, the human beings or animals walking on top, that same zone is a level of support that stops them from falling through the lake. Beautiful reference. Makes me feel bad every time I think about it when I say structure swap. So we got that zone right there. And then we got obviously our lower level of structure, our previous structure low right here. Two decent levels to look for, right? So the level that's on my radar is going to be this first one in here. Again, I'm a conservative trader, first sign of danger. This is where I would predict this would be the first place that I think price would run out of steam and see a little bit of relief. And if I was a trader getting short, this would be the same area in which I would be looking to take profits off of, right? So think like the other trader. Now we can do a few other things here. What else can we do to kind of maybe narrow down our target zone? Steven says 91.98 will be a 618 retracement. Way to steal my thunder, Steven. Way to steal my thunder. Now here's the test for you, Steven. So if we're using that 618 retracement and we're at 91.98 or 91.97s as I have it, you're so wrong. What would be the natural adjustment to that? What would be the natural adjustment to 91.98s? Knowing what we know about the markets. Yep. Let's say you were planning on taking targets, and like this is the area we're looking at for reversal. But let's say you were a trader that was planning on taking targets, and you're looking at this from a trend continuation perspective. You're already short. Yeah, I would get off at 92 even, right? You got to ask yourself. We know that psychological numbers are important. Psychological numbers that 0, 0, 5, 0. You can, if you want to take it down to quarters, 25, 50, 75, stuff like that. It works as well. I mostly pay attention to the 0, 0s. But is it worth the risk of shooting for a target at 91.98 when you can just get out at 92 even? And I know it seems dumb, but I can't tell you how many traders I run into where I'll get, they'll send me a trade review and be like, hey, Keel, lost in this trade, blah, 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 or just missed targets. You notice anything, we do a review. And I noticed that they've got a target at like 91.96. And price reversed at 92.01. And they're like, I don't get it, man. I did some good analysis. I'm like, you did really good analysis, but you missed out on one little thing. You overshot the targets a little bit. So those small things are important to pay attention to. I can't tell you how many times in my stubborn years I've been skunked out by, being so set on a fib level or something like that I didn't make the adjustment to a psychological level. So we got that on there. Let's go down to an hourly chart. Hourly chart's going to allow us to do something else, right? If we pull a fib extension this time from our swing high to swing low, right? This first little breakout right here and back up, we're going to get some confluence. I don't know if you guys can see it, but there's a 1618 there as well. Jason Grayston put out a video this morning on fibs. Perfect example of a fib cluster. We got the two golden means, the golden mean and the inverse golden mean, right? The 618 and the 1618 lining up at the same level. Lining up at Orsi's 91.98, right? And then lastly, right, because we've been playing around with this all year, if we want to bring in some volume profile real quick. We can take that from this recent swing low to swing high up here. And we can see that obviously the bulk of our volume is going to be up here at the consolidation. That would be expected. Our second highest level, however, is going to be right at the top of this kill zone, or right on top of this structure zone right here, which is right around those fifths. So I think 92 even. So basically where we're trading at right now. And obviously we can supplement that with candlestick patterns as well. We can see the rejections down here. I think this is a good level to start looking for counter trend moves. So if you're expecting a little bit of relief from the move down, right? The bears that got involved at the top, they're starting to take a little bit of profit. Perfect time to get a little bit of relief in the market. Look to trade it up to previous structure right here. I don't think there's any reason to get greedy. I don't think there's any reason to trade it for an extension. There's nothing, I'm not too familiar with dollar Swiss, but is there anything on our chart that screams we should trade this for a trend continuation trade and keep buying it to the upside? Right. Got to be smart with targets. We gotta know our role in the market, right? There are times when we can look for extensions when we are in line with the underlying trend. There are times where we want to be like jewelry thieves, where we just want to get in, we want to steal some jewelry, just enough jewelry, then we want to get out before the cops come. This is one of those situations where we want to get out before the cops come. I said I would stop using that jewelry store thief reference after that one trader went rogue and robbed the jewelry store. Then we had to go to court and they tried to say that we were part of it because I gave this rant live. Yeah. So many lawyers were involved in that. I was supposed to stop giving those references after that incident, but yeah, I know old habits. Call John up, tell him be warned. We may have another one. All right. Jagger says, going back down to the 4 hour, just joking, guys. That never happened, nor do we think that you should go out and rob jewelry stores, anything of that sort. Please read the disclaimer and all that fun stuff. Jagger says, oversold on the 4 hour as well. So looking down at our relative strength index, our RSI. Oversold as well, with little hidden diversions too. All right. Any questions here on the dollar Swiss? We're seeing this movement on a lot of Swiss pairs. Hey, and for some of you guys, if you use moving averages, it's on your chart. I don't use it. It was on there for some stock stuff I was doing. Coming down into, that's a 233 moving average. Probably coming close to the 200 moving average as well, if you're someone that uses that. I know a few of you guys use that as a confluence as well. So getting close to that too. All right. Let me know if you have any questions. I'll give a few extra seconds for the people on TradingView and YouTube to chime in, since I know there's a little bit of a delay. I was waiting for a time frame on that Aussie Swiss so I can tell you if it's a bat or a Gartley. This is your last chance to shoot it in. Let me know. Just give me a time frame and I can look at it and let you know if it's a bat or not. You're welcome, Billy. Join us tomorrow, guys. We do this Tuesday, Wednesday, and Thursday, 7:30 a.m. It's loads of fun. Looking for the bat pattern. Just give me a time frame. We'll look at it. All right. I don't think it's going to happen. All right. YouTube, TradingView, thank you for joining on your way out. Hit that like button. Leave any comments below if you have any questions or anything like that. Make sure you watch the Trading Edge video if you haven't already. Do a little bit of a review of the month of January trading for me. Talk about another funded trader we had. And we talk about a free training session on money management as well that you guys can get. So check that out. I will see you